Hello, this is Richard Wilson, and welcome to the Family Office Club. We've got a investor mandate interview this morning with Brett from New York City. Welcome, Brett. Thanks for
Thanks for
being
having
here.
me.
Sure, sure. And why don't you first share what type of investment perspective you have, your day-to-day, work with investing. Just kind of introduce yourself a bit.
Yep. So again, my name is Brett Martin. I'm an adjunct professor at Columbia Business School, and I run a venture capital fund called Charge Ventures. Charge is a New York-based, New York-focused pre-seed and seed stage venture capital fund. And we generally invest in sort of capital-efficient, tech-enabled businesses, attacking sort of large, old economy markets. And we'd like to be usually the first investor in companies, so first capital in the earliest stage. And yeah, it's a crazy time.
Yeah, for sure, for sure. If you're watching this like 9 months from now, it's during the virus crisis. So everything's kind of shut down. Everyone's stuck in their homes. So I appreciate you doing this recording for us. In terms of getting more specific on the investment mandate, since there's a lot of people investing in early stage tech companies, what are the 1 to 3 verticals or areas that you're most focused on, or what's the number one thing you'd really like to be sourcing, just to kind of narrow it down a bit more?
Yeah, I mean, it's interesting. I think the sort of coronavirus and the current trends really are just accelerating a lot of the trends that we've already been focused on. So, we've always been focused on direct-to-consumer healthcare and remote diagnostics. I used to work in healthcare services on Wall Street, so just tech enabling that whole industry. Have several investments there: Parsley Health, Simple Health, Juno DX. The future of work and remote work is another sort of hot topic today, but that's been a trend we've been focusing on. Investors in electric AI, Clay, Transfix, and then finally AI, data, decentralized systems. I teach data science at Columbia, so we've been big investors in companies like this: LivePeer, Bison Trails, Motion.
Okay.
And I would say one thing that's been something we've been thinking about, but is really accelerated, is sort of tech-enabled faith, sort of technology that facilitates people's faith. Some interesting sort of research we've looked at is like 90% of Americans turned to faith after 9/11. There's a 9x increase in religiosity in areas that have been struck by natural disasters, and so a lot of sort of loose ties to faith become strong during times of adversity. So we think that's a pretty interesting market for technology investors to look in, because it's often overlooked by folks like myself.
Yeah, I've never heard anyone mention that before in 13 years. So I think that is a pretty novel idea. I know 1 or 2 people that use their positions at universities to kind of help source ideas and, be more in the line of new research or IP coming out. So how much has it helped you being associated with Columbia in terms of, is that 10 or 15% of the deals you see somehow are connected through the alumni network there, or come through your position, or?
Yeah, we're very fortunate that Columbia provides us with a great talent pipeline. We always have 1 or 2 MBA engineer or MBA interns, and then because I teach data science, we have our data scientist on our team is Columbia, and I think it happens to be that my senior associate's Columbia, and then my venture partner and co-founder is a professor at NYU. So we actually have a lot of that, and the way we leverage that is we've received a bunch of grants to do quantitative analysis on early stage startups. So there's been a big trend in venture capital, kind of software's eating the world, data's eating the world, it's eating every other industry. Every company we look at, we want very data-driven entrepreneurs, but VC itself has historically been a kind of good old boys network. And so we think that's going to change. It's already happening in later stage private equity, using way more data inputs to make decisions. And so we're trying to bring that same sort of technology to early stage companies. So we have a whole sort of data focused organization for both our sourcing and our evaluating startups. And we lean heavily on Columbia talent to do that.
Sure. Yeah, I imagine. So I guess one thing I'm just personally curious about is that when VCs look at opportunities, I often hear, it has to have exponential potential, a great team with a track record, and needs to be able to do 100 times or 1,000 times. And go big and be highly scalable. Like I've heard enough of the pitches to know kind of the common things that are being said. But at the end of the day, because my clients are largely going into things that are in between angel, VC, and PE, and they're coming in the middle usually. But if they made their money in a space, they might go in super early at the same time you guys would. But since everybody has great spreadsheet math, and assuming they got some decent talent on the team to go with that spreadsheet math, and everyone's promising the world, how do you really pick and choose? Like, what's kind of one or two things you've learned that really cuts out a lot of that noise?
Yeah, because we invest, so we often do, we do pre-seed and seed. A seed round in New York pre-crisis was a $2 to $5 million round into a company that already had built out a team and had traction, was doing anywhere between, $10,000 to $100,000 a month in revenue.
Okay.
The other type of investing we do is pre-seed, which is, a sub-$1 million round. We're the first capital in. You usually put in $200,000, $300,000, build, set terms, build a syndicate.
Okay.
And so the other sort of core thing about our platform is we have data, that I just explained, and then we have a network. And so one thing I think you guys really do actually is like build a great network of folks to get leverage across a broad set of industries and, leverage the expertise in your network. And so we, because we have to invest so early, it's funny, you've heard about this, like everyone's seed investing, it's so crowded, but really that's like only in these, larger seed rounds where you have a really established brand name venture capital fund that's leading it, say, First Round Capital or, Primary Ventures here in New York. But it's still hard for entrepreneurs in New York to actually get that first round of capital. So we actually end up having to syndicate our deals with a bunch of angels. And so the way we especially evaluate things is probably similar to the way you work, which is we've built out a network of angel investors that are all kind of operator angel investors in New York. Right. So CEOs, VPs of engineering, VPs of product at, Series B, C, D companies in New York. And those are folks that co-invest alongside of us. And so we leverage them to do special diligence on our companies. And that's, so I think, we're like a very network focused VC, because actually I think the future of the industry is actually way more of these kind of like syndicated models than it was the, historical. I think you still have a fund, but I think, you leverage more of a network.
Yeah. No, I couldn't agree more. I mean, I think that there's two sides of it. When you have a really good network, you see so many deals that your best of the best are amazing compared to what somebody sees if they're just by themselves. And even if they hire two people that were super connected before, within a year or two, their contacts grow stale if they're not always growing those and keeping them alive. And then the other thing is that, like we had a chain of dental clinics that we're doing due diligence on, but we're able to identify 3 dentists who have sold their dental chains. And they're helping us with due diligence on this, because it doesn't matter how many hours I spend looking at it. I didn't spend 10,000 hours running a dental clinic, right? So I can only weigh in on so much. So I think what you said on both sides is so powerful. And I think that is the future of things, is those types of kind of loosely formalized networks that then get formalized around, an opportunity fluidly.
Yeah, VCs are networks, and whether you acknowledge it or not, it's not 3 sweet, white guys sitting in a boardroom making decisions. I mean, even if you can pretend it's that, but at the end of the day, they're leveraging their network to make those decisions. And so we just try to accept that from the get-go and try to spread around the incentive. So we, have a whole system where folks who bring us deals, we help bring them into the fold and find ways for them to be compensated. And the same for evaluating and supporting companies.
Sure. Well, I'm glad we're doing this interview. I mean, this morning we had a member send in an early stage tech deal that was really interesting, and you see 10,000 of these things, so you'd probably discard it relatively quickly for some reason I can't see, but it did look more interesting than the average deal we get hit up with. So I'm happy to share what we see from time to time when it looks like an anomaly type deal or more credible than the average thing that we're getting sent. But, the last question I had here for this interview was your $100,000 piece of advice. What, if there's an investor listening right now, what is something that you could share that would save them in fees or headaches or time, or would make them an extra $100,000 that you wish you knew maybe a decade ago?
Totally. So, I'm just going to give the same advice that I myself am putting into practice at the moment,
Sure.
which is, in this market right now, we're in a period of high uncertainty and, fear. And so I think everyone, was understandably put on the back foot. People's lives are at risk, and it's just very disorienting to have your world turned upside down. I usually never sit in my small apartment in New York, and now all of a sudden I've been here for 14 days.
Right.
But I think that, I took the other night I got to walk, I went outside for the first time in a while, and I had nice crisp air, and I had my first clear thinking, I would say, in a week. And I, realized, okay, this too shall pass. Everyone's on the back foot. How can I be aggressive and offensive right now? And so what we are doing is we are, one, doubling down on our winners. So the companies that are strong, in our portfolio, or even ones that are, we're strong and are going to have a short-term disruption, we're going back to all of them and saying, hey, obviously we're talking to all our portfolio companies and, making sure everyone's safe and making sure everyone's healthy first and they're sane, and then
Right.
trying to figure out how we can help. But, right now is a great time people are very happy to take more capital.
Right.
Right. So, I think if you're an investor in funds, it's a very interesting time to reach out to your investors, obviously get the update, but also say, hey, which are your favorite companies, and, would they like some more money right now?
Right.
Because I don't think anyone's going to hold you up for fees at this moment. I think they're all going to be happy to get their companies, additional capital. And I think you can probably get it in on a valuation that was set maybe a year ago. So, double down on your winners, reaching out to existing portfolio companies or, existing fund investments and seeing there. I think another thing you can do in times like this is you can go back and look at all the deals that you looked at and, find the ones that got away.
Right.
Right. So there may have been some really great companies that you saw in the last year that you tried to get into, but you didn't, or maybe you saw right before, you saw right after they closed.
Right.
In principle applies. Great time to go back, check in how you're doing. If the company's been doing well, maybe an interesting opportunity to get into that company that you didn't have a chance to before. And then finally, I would pay close attention to what the government handout that's going on right now, right? $2.2 trillion stimulus package, that's going to go through in some shape or form in the next couple months. I think it's like everyone's fiduciary duty to go and look and see, how, am I entitled to some of this? And because you're paying for it.
Right.
So, it's on you to go dig through the paperwork. Your brain's going to melt, but see what you can do for yourself and for your companies. And so we're actively working on those three things right now.
Yeah, no, I appreciate that. And that's one theme I've been hearing from the smartest people I know right now is that if you have money, it's a good time to be spending it while everyone else is hoarding it, because you're a rarity that you have money to spend. So if you can acquire a talent, if you can prepay your rent for 7 months and get that 8th month for free by prepaying your rent lease in an office building, or if you can fill your warehouse with supplies that you're going to use in your business going forward, you might be able to get 33% off on the cost of those supplies. So I think that's right in line with some of the stuff that you're saying here. If you go and invest with somebody, they might waive the fee or make it a performance only fee, or they'll be happy to give you maybe a better valuation at this point. So I think those are all really great points. And I appreciate you spending the time doing the interview with us here today. What's the best way for someone to get in touch with you if they have a early stage tech company or a deal or some way to work with you directly?
Absolutely. Just hit me up on LinkedIn. You can find me on LinkedIn, Brett Charge, or my email is brett@. So would love to be in touch with anyone. And if there's any way I can help, let me know. It's great to chat with you this morning, Richard.
Yeah, you too, Brad. Take care.
All right. Have a great day.
You too. Bye.